What's up, traders? So today we're going to go into one of my live training sessions and where we talk about specifically stocks and charts. How do you read a chart? What are the specific things you could look at to predict what's going to happen tomorrow? In fact, we did this multiple times every single week and we predicted basically 100% of the moves. So if you really understand these basics, it's really going to help. And if you like that video and if you like these type of lives and you want to get consistent trainings every single week, all you got to do, like the video and subscribe to our channel. You'll see a subscription button there and you're going to be able to get it every single time. But I really want you to pay attention how we look at the charts. What are the key indicators we're using? We don't overcomplicate it. It's really simple. You just have to understand a couple things and you're good to go. So enjoy the video and I'll talk to you soon. All right. So Chris, you're now the host. You could let people in and all that good stuff. Cool. All right. So if you're looking over here, one of the things I'm going to tell you, there's a few lines here, and I want to explain each one to you and what it means so we're not really confused. The first thing, obviously, is the chart. These are the candlesticks. This shows you how the day is going. Now, I am going to reference some things. Everybody here, there's a lot of people here, so I will tell you one thing. Different levels, everybody's different, so some things might sound easy, some things are like revolutionary, whatever it is. I'm going to go over things, but I will reference something for you to look at, okay? So if you don't know candlesticks, if you go in our classroom section, there's a stock predator course. One of the sections there is the candlesticks. If you're confused, message Chris, DM Chris, he could show you exactly where to go. I'll give you the exact link so you could watch exactly what that is. Again, our goal is to build a foundation for you. So that's what that is. Those are the candlesticks. They go up and down, and that's how the market goes. Overall, there's a predictable pattern to it. That's what we're able to trade predictably. So that's the first thing. The other thing we want to know is there's these lines in the bottom here. These are volume bars. So this is basically telling you how much inventory is being bought, right? So if the volume is high, that means a lot of people are buying it. It's in demand. When it's low, it means it's not so much in demand. It's probably ready to be sold or have go to the downside or the bear side. So those are the two patterns that are very, very important. The other things you'll see here are these lines. There's a red, blue, we'll call them magenta, and green. So the red line is called the 200-day moving day average. What that is, it shows you this point right here. If you take the last 200 days, add them together, divided by 200, this is going to be the number. And it's letting you know what the overall health of this stock is. So anything above this 200 line and this 50 line. So 250 are both very important lines because that's the health index of the stock. It's letting you know that, listen, maybe it has some good days, maybe it has some bad days, but overall it's good. It's kind of like, you might have a great life. Doesn't mean you're not going to wake up in a bad mood sometimes. I know Elliot does. I'm kidding. No, I'm not. But we all have those days, right? We all have those days where it's like, oh, life stinks. Well, it doesn't really stink. But sometimes we might have a great day, but everything else sucks. This is kind of what tells you what that is. The red line and the blue line are the ones that are letting you know the health index of the stock. The other two lines are the short-term averages. So those are the 13-day moving day average and the 20-day moving day average. Those are letting you know overall in the past couple of weeks, how are we doing? Are we doing pretty good? So that lets us know if, number one, is the stock overall healthy? Number two, are we doing short-term pretty healthy as well? So just because we have everything good, are we doing good right now? Those are the very important key indicators to letting us know, do we want to invest in this short-term or long-term? Really all depends. And when you start seeing different things and seeing how these patterns work, it's very, very apparent. You don't have to believe me. I'm not like a psychic or have some sort of crazy talent. I just look at the patterns and they make sense. And we'll go over that. So here's the one thing you want to know. If you want to invest in a stock that is bullish, okay, so this is one of our strategies. It really goes into something called the balanced profit. Then you want to make sure that all of them are above those lines. So the stock needs to be above these two lines and above those two lines. Very, very simple. So when I'm looking at here, well, I could tell you, we could see, hey, is this stock bullish currently? Is it a good stock? Well, just based on the market, again, we're going really slow here. I'm going to take this chart. This is a 10-month chart. I'm going to make it smaller just because some of you are on mobile, so you could see. So this is 3 months. Every single candle is a day. And here's what I'm going to tell you. It's above the 200-day moving day average. It's above the blue, the 50-day moving day average. It's above the 20-day moving day average and 13. Overall, the health of the stock is great. Now, how do we know which ways are going to go? So, a couple things we want to be worried about here. Number one, if you look at how this is formed, it's called a bounce profit. I named it for that for a reason, because we're looking for bounces. So in my course, I talk a lot about basketball. One, I like basketball. Number two, it just looks like something that bounces like a basketball. And I'll show you what I mean. Imagine these being your floor. Okay, just think of it as a floor. And when you're looking at it as a floor, what does a ball do? It bounces off the floor. Sometimes, depending on the ball, it might bounce a little harder than another. But if you have a good foundation with something, right, a good floor, means the stock is bullish. Guess what? Now we could look at it the right way and say, hey, if it bounces, it's going to bounce back up. That's what stocks do. Now, let's look at what we have going on. When a stock is above these lines, look what happens. It goes up and then it comes down. And then when it comes down to these little lines here, it starts making a decision. And we'll talk about it. The one question you should have, okay, buddy, I joined this live and you're talking about some Crayola lines or something, and I'm supposed to believe these magical lines. No, don't believe me. That's not what you're here for. You need facts. Here's the thing. I didn't come up with these lines. I'm not that much of a genius. That'd be cool. What they are is it lets us know based on human behavior. So this is the key to this. We're not worried about the news or whatever people are trying to manipulate. It's about human behavior. How do we all trade? Now, usually you want to feel like you're the leader. Here, you want to be the follower. Wherever people go, you go. And realistically, we are creatures of habit. We're doing the same things over and over here. What we've learned is when a stock goes up, there's a moment when it goes through exhaustion. Okay? And exhaustion means it's tired, it's been going up, it's time for it to kind of go down. And there are signs for that. So I'm going to show you different signs we'll see right now. Maybe next week, we're going to use a time machine to really take a look at different things. But I wanted to show you today the basics. Again, if you join every week, we're going to build your foundation up and up and up so you really understand these things. Now look at this. When this stock right here exploded from this moment, went up, 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 came down and made a decision. Says, you know what? I'm bullish, but I'm going to take a little break. So what means is whenever you see a stock go up like this, up, 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 you see how there's like this gap right here? I'm going to start putting up arrows here so to be a little more visual. I apologize. I usually do that. Here we go. So right here, when the stock goes up here and it's been going up here, this is a very strong move to the top. But eventually it tires out and it goes into something like this. This is called a consolidation. Okay. Very important thing you want to look for. Now, what is a consolidation? Everything I'm going to tell you guys, here's the difference with one of the things we try to do. I want you to understand why it's happening. Not, hey, when you see this, do that. When you see that, do this. You're never going to learn. Because the minute I stop talking, you won't understand what to do. You can't trade on your own. That's not the goal here. What a consolidation is think about it. When the stock goes up, as a human being, forget everything else. You see your money going up, up, up. You're making money, making money. Most people, let's take gamblers out of the picture, things like that. The majority will say, wait a minute. I think it's time for me to possibly take some of my winnings. Let me take some of my profits. Maybe leave some, maybe not. But we go through this moment called indecision, where it's, well, we're not sure if everybody's going to buy it, but we're not sure everyone's going to sell it. So it goes through this moment where there's not a lot of movement. And what we wait for here, the indecision, why it's called an indecision, is we're still trying to decide, are we ready to sell it all or are we ready to buy it more? Because now it's no longer bullish, but it's no longer bearish. So the market has to decide that. The secret is, don't make a decision before you see the confirmation. A lot of people make this mistake. I see it all the time. And I talk about it. They'll see this and then they'll say, you know what? Right around here, ooh, look, it's a little bit there, but it didn't break. But you know what? Forget it. I think it's going to go up, obviously. And then they'll try to put a bullish play in, and then it went down. What you should be doing is, don't try to predict the future. Follow the trend, okay? So the minute this candle happened, that's a big drop. And you could see how we know that is different candle patterns. Again, Predator course will really give you that understanding. So if you're asking, well, how am I supposed to know these patterns? I'm not a magician. I can't teach you everything all at once. I'm not giving you any shortcuts here, but I am giving you resources you could look at and really understand candle patterns. Here's what I will tell you. The minute you see this candle, that lets you know, we have a strong part here that broke through this consolidation, letting us know it's bearish. And the next thing, one of the most important indicators, if you learn nothing else but this, volume, okay? In fact, a lot of people go by price action and volume. Those are the two things, okay? What does that mean? Well, if it's price action, means how fast is it moving? So these are the things you need to understand before we go into really looking at different plays and all this other stuff. And we will do that. But I want to make sure you really understand some basic knowledge here. So when I see this, this lets us know that, hey, this could be a strong move. Maybe we could invest to the downside. The only problem is, I told you it might bounce here. So some people might trade this, take a risk. Some people might wait because, look, it's bouncing back. But then it made a decision, says, nope, we're going down. And this could have been a great play to the downside. So that right there, if you could see how the mind should take that based on human behavior, not just because we have candlesticks. If you think of them just like candlesticks, it's not going to help because you're going to look for patterns that don't know what they mean. I could tell you, oh, look, this is a bounce pattern. Oh, look, this is a, rising wedge pattern. Oh, this is a whatever. There's so many different names that there's patterns. There's a Mirabozu candle. That's not going to help you because you don't understand the reasoning behind it. But when it comes here, what this tells us is this is a point. There's a reason why this moving average is here. On average, if people do not start buying here, the next point they might start buying is here. Is that for certain? Do you want me to tell you it's 100%? If I tell you it's 100%, you should probably leave this meeting because I'm full of caca. Nothing is 100%. Nothing, okay? But here's what I will tell you. What this gives us is a signal. The minute it hits this line here, and you say, wait a minute, it's that line. This is what Vlad was talking about. Is it time to get in? This is just a signal to let us see a good reversal. The next day is when we want to look at. Now, if the next day, you could see it fell. So this little wick here lets us know, this little line, that the stock was here. It's a shadow. Hey, I've been here before this day, but then I went back up, and it's a big green candle. So this is letting us know we're ready to go up. That's a sign of I'm ready to take it to the next level. And this would probably be a good time to get in, either here, depending on how good you are, or maybe you wait till it gets to this level where it's back up to the green. But the chances are, it's once we see it go down and we start seeing a reversal, the momentum is done. Now, here's why I love this candle. See this little candle? I apologize. I try to delete as many so I could really look at all this. Look at this candle for a second. Isn't it cute? It's cute. I like it. Very pretty. Here's why I love it. It's not just a candle. It's this right here. What this is telling me, now I'm going to give you an example of why. Volume. Okay? Now I want you to think about this. What this candle is letting us know is people are buying. Now, let's just say not too long ago, we had a car issue, right? Right after COVID, there were chips missing. I don't know if you guys are familiar with that, whatever, but people couldn't, like, we didn't have enough cars. Now, so here's the problem with that. Even though at the time people were wanted to buy cars, the minute cars come out, they're being bought, but the inventory wasn't there. So even though it was bullish, the volume was low, which usually means it's not going to do good business because there's no inventory. If you're buying an iPhone, there could be 5 people buying an iPhone today, 10 people, 100 people. But tomorrow, if you have no inventory, you're kind of screwed. So the volume lets us know, is there still a lot of people wanting to buy? This shows us not only is it bullish, but it has so much more. It's like trying to drink water from a fire hose or something. It can't happen. So what happens? It starts trickling to the next day. Now, don't get it twisted. Sometimes you'll see, like right here, it went up a little bit, nothing crazy, but overall, that's what it does. The other thing we have here is momentum. This is a momentum shift. Now, this is a lagging indicator. Means it may show, even though this is starting to go up, the momentum hasn't shifted. But when you see this cross, usually, whenever you see that cross, and it's called the stochastics, whenever you see this cross, usually shows a reversal in momentum. It's now we're seeing that shift. Think about all the things we just talked in a matter of, I don't know, 20 minutes. We're starting to build a foundation of how we make decisions. And that's key. And you should never make a decision because, oh, I feel. If I hear you say I feel or I think, it should, well, that's subjective. And if we could argue it, then it's not really much of a decision. What we want to do is look at facts. The fact here is it's bouncing off an average, which usually people start to really make decisions of reversals. It has a lot of volume. The momentum is still there, but it's lagging. That's okay. And the next day we're seeing even a stronger upside to here. It's beginning to show us a little bit more sign, and it's now bouncing off this average. So, and if I'm wrong, which could happen, usually it'll be an off, maybe like for a day. That's what you never want to do. If you're doing day trading, this is not going to work. It's too much risk. You can't afford to make a mistake because there's no other day. It's that day. That's the best you could do. Here, it's okay if you maybe don't make money that next day because the next day it'll explode. But you have to follow those rules. You have to follow those rules. Now, what I'm getting to here is I'm explaining all these things because I need you to understand at the end of the day, you need to be logical. Whenever I try to teach people, I want you to question me. I want you to be like, wait a minute, wait. Because if I don't have an answer for you that's logical, then you shouldn't be making a decision. I'm not saying I'm a guru. I'm just going by based on facts I've learned, and that's what it goes by. So those are little rules we want to start following. And based on what we're looking at, now we could say, and we're going to get to the current, right? We're going to get there. But for now, let's really just keep looking. We already know this is going to bounce. So that's cool. Now, as it goes, guess what happens? Now let's look at different patterns we've already learned. All of a sudden here, let's go right in this area. What we're seeing, these two candles are known as doji candles. They're basically saying that the stock did move up, down, and came back to basically the same exact spot. That is the biggest form you could have of indecision. It's letting us know, we could be going up, we could be going down. A lot of people may think it's going to go down because it's ready to bounce back. That is not the case. We need confirmation. If you don't have confirmation, you have to play the big P. The P is called patience. Okay? Don't try to be the hero and get into a stock. That's how you lose. You're not going to predict what the market's going to do. You want to follow the trend. Now, the second it broke out here, different story. But even here ends up with an indecision. I wouldn't invest in it. Yeah, obviously I know it's going to go up because I'm seeing the future. But I wouldn't have been able. Anything here lets us know there's an indecision. Not a good time to invest. Now here, you see this candle. So here's what I will tell you. Whenever you see a candle here, okay, It's way above its average. This is very important. Now, we want to look at specific stocks that have these type of patterns, usually very high volume stocks, okay? Very important. So I do mostly options trading. I would say out of my trades, I probably do 100% options because they're just more lucrative. You're making way more money with less money. But with options, you want to make sure that it's liquid. I mean, these are legitimate stocks because if you try to invest in something that's cheap or has very low volume here, you see this right here, this volume, that's 14 million. Okay. So 14 million is a lot. Anything over 1 million is a pretty liquid stock. Okay. So the more volume, the better. Somebody could try to do some sketchy stuff and maybe affect the price, but it will never happen. I'll give you an example, like Bank of America. I think Warren Buffett invested like $3 billion in one day, and it went up like $1. This is because it's too much money in these things, so it's very hard to have something dramatic happen to it that's going to affect it in that way. So going back to this, the reason I'm not a fan here is because it's up. The higher it is from these averages, the more stretched it is, the harder it is to predict how far it's going to go. And what happens is you got to look at it as a rubber band. Because this is an average, this is like the identity. Okay, this is the identity of a stock. This is a stock that believes I am on this trend. This is what I do. But sometimes has a little drinks, went to a party, all of a sudden plays a little, goes a little crazy outside of character and it goes up. And maybe a little higher than usual. But eventually it wears out and it always comes back down. You can't predict those moments. But what you're waiting for are two things. One, here, this moment right there. This is showing us that, hey, let's think of it. Yeah, let's use another example. The guys, this little stock went to the club, got drunk, had a big party. This right here lets us know it's wearing off a little. I think now we're having a little less partying. They're beginning to get a little sick, tired. The chances are they're probably not going to go out on the dance floor again, and it's probably going to come down. That's a sign right there. So if we look here, the other sign is, let's just confirm this. Ooh, boom, look at that. Red volume. Yeah, this person does not have a lot. We're good to go. And that's a great time to make a decision and say, you know what? Now, the second day even shows you an indecision, but it's an indecision going down. Different world here. We're starting to see a pattern to the downside. And guess what? We started seeing it and it kind of started staying in this indecision area. So if you invested here, you would have gotten this win here. Now that we understand this, okay, I'm going to ask somebody here. Let's get you guys involved because I gave you some patterns, but instead of why I did all this is I don't want to tell you what I think about this move. I want you guys to tell me based on what we've learned so far. What is this? Now that we saw this, it had this big upswing. What is this right here that it went through?
Consolidation.
Who said that?
Mohil.
I think you're wrong. No, I'm lying. You're absolutely right. Good job. It's a consolidation, right? So think about that. So now we know that a consolidation is a form of indecision. Okay, next question here. All of a sudden it had this candle. What is this candle showing us and why? Like what's the position of this candle that's very important?
It's breaking out of that consolidation.
Yes, it's breaking out of that consolidation. Okay, we're going to get into harder
Buyers
questions.
stepping in.
I'm sorry?
Buyers stepping in.
Yeah, who's showing off here?
I am.
Is that Eugenia?
Yeah.
Oh, okay, it's hard to see your mouth moving. It's like a permanent smile. Nice seeing you on the live. But yeah, good job. The buyers are stepping in. Now, here's a question. Do we want to invest in this exact day? The buyers are stepping in. It's showing us a beautiful candle, full-bodied candle. You could learn at the Predator course.
We need the confirmation.
We need a confirmation. Now, when we see this, is this a confirmation?
You're looking for volume.
We're looking for volume. Yep. Now you could see here, the volume here, bring this down here, very strong. Look at that, almost 40 million. Next day, another strong day of volume. Boom. So now we're seeing that move. And look at this. Next day, we got this going here. And now I want you to understand something. These candles don't do it justice. The amount of money you would make here, depending on if you're trading options, assuming you're trading options. Now, I do have some courses on options as well in here. So options is key. Options is very key. Now, we do go into something called the paycheck collector, where even if it doesn't go in your direction, you'll still make money. But we'll get there later. Right now, we're just building the foundation here. Look at this candle here. It's going up. We made this money. But what about this? Do we want to continue moving up? Even we could see the future already. Would
No.
this be a good decision here?
There is a
Why
selling
not?
pressure starting to build.
Yep. It's beginning to be what she's calling selling pressure. But look at this. So this is now a doji. We talked about it. A doji is a form of anybody?
Indecision.
Indecision. Yep, exactly. So now I could tell you, oh, guys, you should have invested. Look, I see the future. This is now, to me, not a place I will invest. There's other strategies to invest with this, for sure. We'll talk about those. Going with the basics, just going up and down, swing trading, these type of things with options, I would not invest. Now, some people would make money in this. Beginners would actually make money on this because they're like, well, keeps going up. But we don't want that. And here's the other thing too, and you'll see it as we go through the next few days, what the stock is going to do. Realistically, it doesn't happen that often. You can see here it had this moment, but usually it goes up. What we're looking for right now is what? Think about what happened here. What were we looking for over here and over here? What was the one thing we need at this point?
Consolidation.
Either right, consolidation, or now there's not enough. Whoever said that is 100% correct. Based on,
Higher highs. We're looking for also like the formation of the higher highs and higher lows. If
yes,
this-
yep, exactly. We're looking for the higher highs, but also if I go back on this chart, I didn't give enough data just because I want everybody to see. If I go back to 9 months, you'll see it doesn't always go through consolidation. Sometimes it'll go up, and then it'll start coming down. It'll go up, down, up, down, up, down, up, down. But usually there's a few days of consolidation. So, and that's important for you to know. Now, some people get a little anxious about this, and I'll tell you why. Because they don't want to miss out. Let's go back to 3 months. They're thinking the minute they see one candle up, it's going to go down. Let me see it. Relax. Just look at the pattern of the behavior. Usually, whoever said consolidation, that's usually the case. That's usually here the case. They're gonna go through these moments, especially with such strong movement. So right now, to me, a lot of people are saying, "Well, look, it's still going up. Let's ride the wave. Don't ride this wave." Because here's what you got to listen: stocks take the stairs going up and the elevator going down. They will drop high, like you could see here, all these days, and then boom. You don't want to get caught up on that. What you want is you want to see the next day get a little lower. That's where you want to get in. Now, here's the other very important piece why this is dangerous. A lot of rookies will see up, look at it going up. That means I have to buy. But look at this. This sign right here, when you see these candles forming this is called decreasing volume. And that right there is beginning to show us a sign of momentum being shifted. And you can see here, this momentum is getting flat. It's about to start coming down. That we're getting tired. This roller coaster is getting tired. It's just a matter of time. But the minute it starts dropping, we could put in a trade to go to the downside. Again, you don't have to make money going up. You could also make money going down. In options, it's called calls going up, and then puts going down. All righty. good thing. Just looking at some messages here. Stocks take the stairs going up. Oh, yes. Oh, thank you, Kate. Appreciate it. If you guys have any questions, like I said, today I really, because it's my first live with you guys, I wanted to give you a good foundation. So really understand. So when I'm looking at this now, I'm saying to myself, okay, I have a good feeling. I have a good feeling that this is going to come down. I'm going to wait. Okay. In the future, we're going to go over something called a paycheck collector where, hey, you know what? This is fine. Now, there are certain stocks we could look at and say, let's look at, maybe you have some favorites. Say, let's look at overall and see, based on these patterns, can we make a decision? I'm going to pull up this chart and I want somebody to tell me, what do you think about this? And here we go. I'm going to put a 3-month chart. This is AT&T. Now, we could look at the weekly charts as well. Okay, so let's go back really quick. And I forgot about that. I apologize. Before we go to this, let's look at the SPY now. This is a daily chart, right? But you also want to look at a weekly. So if you're going to invest longer term, a month or two maybe, this is become a weekly chart is where each candle now is a whole week. And you could see even on the week, this is so stretched. And you could see it's still decreasing volume, which just lets us know in general, it's just a stock that's very stretched, very, very stretched. What we're waiting for are these candles. When the market starts tanking, a lot of people will be like, you see, look what's happening. No good, no good. Here's what I'm going to tell you. I hear that all the time. If you ever tell somebody, oh, I do stock trading, they're going to start asking you, oh, well, what do you think about the market doing this? I mean, can't you believe that it's going down? Like how, I guess it's not a good time to trade. Guys, all it is just candles going up and down. If it's going down, then we trade down. It really doesn't really matter to me what's happening. I mean, it sucks for the world if it's not doing good, but when it comes to trading, I'm either trading up, or I'm trading down, or I'm doing some sort of spread, where we're collecting premiums, things like that. But at that point, it really doesn't matter. Does anybody have any questions based on what we're talking about so far? I know you guys show me some stocks here. I'm going to actually look at some of your stocks and we'll start making decisions. All right, Kelly, is it CX? Okay, so let's look at CX real quick. So this is I believe, is it Kelly Myers? I'm not sure which Kelly it is. Okay, but let's take a look here. Sorry, my message is wrong. Okay, so this one she's pulling up right here. Think about this one. Let's put into 3 months. 3 months. Based on this, now this is a little different, guys, and here's why. We talked about what a bullish stock is. What I didn't tell you is what is a bearish stock. Now, a bearish stock is anytime the stocks are below all these averages. So overall, this stock right now had this pattern of below, and all of a sudden it just broke out of this consolidation. So whenever you see stocks go into this direction where they're just following this big pattern, here's the thing. It's called a channel. Think about a channel. It's like a river going down, going down, going down. But the minute it breaks through that river, big things can happen. One, it could be the news. One of the things you want to do is go to like Yahoo News, pull up the ticker symbol and see, hey, did something crazy happen to the stock? That's the first thing. Second things is earnings. Do they have earnings? Those things can affect the stock in a way that's unpredictable. So you always want to stay away from those type of things because that does not fit the human behavior. Realistically, there should be some sort of like a code for you to know, hey, if I look over here, I see, hey, right here says earnings tomorrow, earnings today. That's why it went up. Immediately eliminates everything. Let the earnings happen. That's it. Let the gambles continue. Then you move on from there. This to me right now, I mean, obviously it's not earnings season at all. It just broke through here. The only issue I have with this is, and this is what you have to really be careful with, look how much the stock costs. $6. These things can be manipulated. I can't tell you if it is or not because of the fact it's so cheap. The volume is there, yes, but sometimes penny stocks have a lot of volume, but a lot of times you could get faked out on these because it's a company that's trading very cheap, and it's very easy to see this drop really fast because now people bought. They call it pump and dump. That's usually what happens to stocks that are a little bit cheaper. Cool. Any questions? Let's continue here. We got LUNR. Let's look at that one. LUNR. Okay. So now this one here, again, cheaper stock. So a lot of times I usually, when I do a filter, again, we'll go into filtering a different week. You will notice, let me go here. Okay, so yeah, so this one here, it went down also, very down stock. But now I'm going to show you another thing here. Now we're starting to learn patterns. This is called history. Right here, this is called resistance. So historically, this formed a ceiling. A ceiling is like what we talked about, the floor. This is a ceiling. This means every time it hits this part, it keeps going down. So we'd have to wait until it breaks out from here to see some sort of move. Again, I would not trade this to begin with because the stock is going up, yes. But remember what we said, the health of the stock needs to be good. The reality is, even though it's bullish, it's below its main two lines, which means it's just having a good week, good couple weeks. But overall, it's still getting pushed to the downside. It's been that way since right here, since last month. So I would probably not want to invest in something like that. All right, let's see here. Let's look at UPS from Amit. All right. Okay, so now is UPS, can we consider a UPS a pretty decent company, right? Pretty big company. So that's a good thing, right? Yeah, Kelly, you put a lot, so I want to use somebody else's and then I'll go back to yours. Yeah, if you guys have any stocks you want me to review, let me know as well. But what I'm doing here, I'm giving you the exact concept so far we've learned. Now, this is an exact thing we just talked about, but on the other side. We talked about the ceiling. Look at the floor. Every time it hits this area, it keeps boom, boom, boom. Now, over here, it's called a double bottom. So you could see here, it hit here. It hit here. Actually, it's now becoming the hitting the third time. So sometimes it could break out of this. Now, if it does, then we have to look at the history of the stock, and you will see the last time it went below this was right here, which means if it breaks through, there's a good chance we could see it come over here. That's one way of looking at it. The other way is, again, the stock is below its averages, so it's been very, very bearish. However, if it breaks through a short-term consolidation right here, so this is where it's been this is the channel. We just talked about this, right? It's in this channel. If this goes back up, we could start seeing it. You could play this whole area. That's one way. Or if it breaks out, we could possibly play even more momentum. So, but we need to see a signal. Now, what would be a good signal to see? Well, let's first zoom in on this one because there is a pattern to this. Sometimes we find stocks that don't really have pattern. Let's go into a 3-month chart again. Well, actually, before we do that, let's go into a weekly chart because I want to see overall. You could see, and the weekly matches, it's just down. It keeps hitting every week. This is kind of its support all the way over here. Just, and it's very choppy, very small little candles. So let's go back to our daily now. Let's go back to 6 months. Let's do 6 months. Yeah, let's do 6 months. Watch this now. Oh, where's my thing? Okay. So in this case here, like I said, we have this area right there. Okay. What candle now would we want to invest in this right now? Because it does look like it's starting to stop in this area. Would this be a good place to invest to a reversal? Technically it did hit here. I heard a no. Why not?
The volume is very less.
We need the confirmation candle and a little bit more volume, although it's heading towards the lower Bollinger Band, so there is a possibility of bounce.
We're not going to go into Bollinger Bands today, but just I don't want to confuse anyone. But yeah, You're right though. There's no confirmation. We need a confirmation. Very, 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 very important. Very, very important. Because this just shows that, hey, yeah, I'm not really bouncing. I'm just kind of chilling here. What Eugenia said, if we get a confirmation, now she's talking about a Bollinger Band, which is another indicator we could look at. But for now, what we see, right, is if we see another candle break, now this is important. If there's another green candle, that's fine. But if it breaks through this line, what it's doing then, it's breaking through on this area here. So you can see this formed a nice little consolidation, which is from all the way here, it's a triangle. Now these are a little bit more advanced to look at, but what it's showing us overall, this stock is going into this little area, and what you'll see in the next probably week, maybe 2 max, it's going to have a strong breakout. Could be to the upside, could be to the downside. The confirmation is if it breaks through this blue line, it's a good chance it's going to continue going down. My guess, if it breaks through this line, which is around if it gets to 137, 138-ish, you'll see a whole different ball game is going to go all the way back to the top. Again, you don't have to believe me. Look at overall. Now, this is a very strong one, but if you look here, did the same thing. Nice consolidation. Boom. The minute it broke through, there's that upside. Okay. Stocks have a lot of history. Here's a smaller one here. Breaks out, boom, to the upside. So those are the things you want to start looking at and see who can we make decisions in 2 weeks for UPS. Okay, Kate, good question. So 2 weeks is a long, so we're not looking to invest in this for months. Well, when we trade, I usually hold stocks 2-3 days, unless it didn't go as I needed to. Sometimes it takes a few more days, but usually 2, 3, 5 days max. So 2 weeks away is actually a decent amount of time. If we see the confirmation, again, if you get that confirmation, look at the stocks. When it went like this consolidation here, if it happened 2-3 days, you're making a ton of money. You don't want to go past here. You know, like you're making a ton. And you could see here, it breaks through, hits this 200-day moving the average back. It's only a few days to make money. I hear the word invest and think more long term. Yeah, invest is anytime you put money in, you know. So, and one thing you got to understand too, and this is important, you know, a lot of people be like, well, investing is gambling. It's not. And I'll tell you why it's not. When I'm saying investors, you put the money in, but if it's wrong, or maybe you make a little money, you could always get out with still having your money. Gambling means you put your money in, you hope for the best, and if not, you lose it all. It's different. So when in this situation here, we're investing short term, but it doesn't mean we're gonna lose everything every single time. That almost never happens unless you're just lost in your decision making. What about companies stock? Oh, Tesla. Okay, sorry guys. There's so many of them coming up here. If I skipped you, give me a second here. Let me do Zap, and if I see like the same person, I'll try to come back to some of your stuff. So when I'm looking at Zap, so this is not a company I would ever invest in. I can tell you right now, there's too much going on. Okay. And people fall in love with these moves. Like those are unpredictable. There's not, so this whole thing, this is like, it's the same as going to Vegas. There's really no pattern to this. There's nothing I could give you here and say, oh, this is good. I mean, you could see here, it's done nothing, went down, kept doing nothing. And how are you going to predict this? It's literally playing the lottery. I mean, the only thing I could tell you is, yeah, it went up. Now it's probably going to come down. But here's the other part you're not thinking about. When you buy something, think about this. If you bought an iPhone, or I don't know why I'm saying an iPhone, but I don't know. We'll just talk about an iPhone. And you paid $400. All of a sudden, this thing goes up to $1,000. You might want to sell it. But here's the problem. Who's going to want to buy it now for $1,000? Like, I would rather just wait. So what happens is you won't be able to fill your orders with stocks like this. There's not a lot of volume a lot of times with this. Like you'll see this volume, yes, but it's because of it's daily. It's just, it was so much volume, but now it's going to the downside. You might it might be up here, but no one will buy it from you for $5 unless it's $4. So you won't be able to get your order filled. Those are the issues people run into. It's like, but it went up. It did everything it's supposed to. This is a scam. Well, it's not a scam. It's just people are dumping it out. There's no demand for it. There's none. And there's ways you could see like demand for each stock. And if you're using like, depending what you're using, like a Robinhood, Thinkorswim, Webull, they all have something like that. So yeah, so this is not something I would look at. AVGO. Okay, so this one here, let's take a look here. And guys and girls, if you feel like this is like, whoa, this is like a lot of information. For some of you, obviously, I know this is you know, very basic because you've done either our classes, you've been in our academy, whatever it is. But if not, we have resources for you. So this one here, this is anybody. Actually, I'm going to ask the audience. Glad you're doing good, my friend. Srivan's doing great. Okay. What did I just do here? What is this? What do we call this? Who could tell me? When I form this triangle, it's a form of
Consolidation.
Yep, consolidation. Thank you. It's a consolidate. Oh, okay, Hector. Come on, show off. No, you're right. It's a flag. It's a flag pattern. Yes, which is also a consolidation. But you're correct. So this is a great sign. Now, this stock overall had this really big gap move. So a lot of times these gaps usually try to get filled with like it was getting filled here. But from here, it's going to be interesting. Even though it's above these lines, usually it'll make a big move. Now, this is a very expensive stock. Now, what's cool about these prices is in options, you don't pay that. You pay for contracts, which is pretty cool. Yes, Elliot, you're right. It looks short squeeze. Like, yep, exactly. That was like a short squeeze play. I don't want to say that because I don't know. I don't want to assume, but I would love to see what happens if it breaks these two lines, either here or here. Because as you form, like Hector said, it's a flag pattern. What we're looking for, and I'm going to just again highlight some other places that have that. Look at that. Flag pattern, boom, to the downside we go. Flag pattern, boom, don't know which way. Here's another one. A small little consolidation play at the bottom, okay? And then boom, broke out as soon as it did that. I'm curious to see if it does break through here. Now, if it does, it's going to go to the upside. And somebody might ask, well, yeah, but how high is it going to go? That's when we look at history. And if it has a high before, which is right here, that's a good spot. Now, there's other tools like Fibonacci we could use. I don't want to confuse anybody today. Like I said, we're just going through kind of the basics, building up your foundation in your brain here to understand what I'm looking for, how we could make realistic decisions here. I lost my chat box. Who took my chat box? Here it is. I was about to look up flag, the stock. It's on. When in the day, should I buy once I see confirmation the previous day? Can I use hourly charts? For what I do, so we focus a lot of people who have jobs, who are busy professionals, like career oriented, making six figures, like busy people. So that's how I started. I was working at a very, corporation. I can't trade an hourly chart. Now I do maybe a 4-hour chart because it divides the day into two. So that's going to help. But an hourly going into 30-minute, those type of things, it's short. It's too short term. So yes, can you do that? Do people do that? Yes, but they're also trying to get in a play that they might get out an hour later. Okay, now that goes into day trading. Now you have to have $25,000 in an account, which is fine if you need that, or you need a cash account. But you could start looking into too short term, because what happens is now you start looking at a shorter term. And what happens is, yes, if I pull this stock up right now, let's just say I do 5-day chart, right? And then I'll put in you said hourly, so let me see here. 60 minutes. Yeah, I mean, technically you could play this. Right now it's bullish, but now you have to sit in front of a screen. You have to sit in front of a screen. There's no ways around this. What's cool about this play, you sit down at 3:30, okay? Very important. Anybody can tell me why specifically I say 3:30? Why not 9 o'clock? Why don't you want to go into a stock like this? Sorry, like something like this. Maybe you see a great candle. Maybe it's there. Why 3:30 is such a magical time? Anyone want to take a guess? If not, no worries. I have the answer key.
Decisions have already been made.
Yes, very, very good. The decision has been made. So what that means is sometimes, like when you look at these candles, you're seeing the end game. The reason it's very important, I'm showing you candles that have been already 100% committed to being that candle. What happens is if you open up at 9 a.m., 10 a.m., 11 a.m., 12 a.m., you'll see, oh my God, look at this beautiful candle. You invest. You said, yep, this is what it was. At the end of the day, the candle reversed into a bearish candle now. Well, what happened? Because that candle wasn't fully formed. 3:30, you only have a half an hour left in the market. So you have that 30 minutes of time to make real decisions. Can it still change? Of course. But the chances now are small. So the later you are towards closing, the better decisions you're going to make. Now, when it comes to opening, every time you make a trade, especially if you have a job, you're working hard, you're doing all these things, you have responsibilities. You don't want your day being ruined because, hey, you have to wake up early in the morning. You set up closing orders. You set up orders and saying, hey, I think it's going to, exit here. This, if it goes here, if I can make 20%, get me out automatically. The best feeling in the world is when you wake up or you're working or you're driving to work and your phone goes boom. And you look, oh, all my profits are there already. This is cool. So you have to be realistic with your schedule. Now, if you want to day trade and you're like, yo, I like what I'm seeing here, but can I do it quicker? Can I sit in front of a screen and like click, 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 and that's your game and you just want to you enjoy it and you just want to see the rush? I'll be honest with you, that's just not me. I tried day trading and I made some money. And then I lost money because I just get pissed. It's not for me. I don't have the patience to sit there or the stress level or the risk tolerance. I just don't. I can't see my money going down, 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 down. I'm like, oh my God, I have to sit here and freeze and don't do anything. Like, okay, there you go. I made money. Okay. I can't do that. And it's just too, health is important to me. So I try to stay healthy. I like it to be a little bit more passive. That's all. So I would say to answer your question, I use daily, but I will use the 4-hour chart. The 4-hour, not because it's hourly, because it divides the day into two. So if I go into a chart like this, let's go 3 months, you could see now I could tell, I'll go even a little closer. Let's go 15 days. These two candles now lets me know that even though it showed us a bullish day, I could tell the first half of the day was strong and then it didn't reverse. It had the second day was strong. The day before started strong.
Vlad, I think you are showing a 2-hour chart.
Oh, I apologize. Very good details. Thank you so much. 2 bars. I'm sorry. My apologies. It used to be, they used to have it differently here. They changed the way they show times. This is the chart. I apologize. Thank you. This is okay. So right here, this is 2 bars a day, it'll say. So you could see this day here, first part of the day kind of stayed in the middle, but now it's beginning to turn. Those things are important because towards the end of the day, you want to say, okay, I know the candle is bullish, but towards the end, was it bullish? So like 1, 2, 3, 4, like here, this is an important day. So let's go into you see how this one just fell, but it began to come up towards the end. This is important to look at. So 1, 2, 3, so 4 days ago. So if I go to a daily chart, 1, 2, 3, 4, see this? This is an important thing to look for a 4-hour chart. This shows me bearish, horrible. Oh my God, never invest. You're right. But was it that way the whole time, or did it go down and then towards the end people started buying? So would I still invest here? No, but if I look at a 2-hour chart, now I'm not going to make that mistake. 195. There you go. 1, 2, 3, 4. Right here, what it really showed me is it went down and then it reversed in something called a hammer candle. So when you're seeing from the bottom a hammer candle form, that's a very bearish sign. What that would tell me is maybe I won't invest, but I'll keep looking. I'll put it on my list and say, let me check tomorrow because I'm not going to buy into just this one day. Now going into, hey, you could say, well, okay, but Can we go even more hours? Can we go to 8 hour or like we were saying hourly? Yeah. It's just now you're looking at short term. But a 4 hour can help to make a decision towards the very end. Cool. So, how are you guys feeling about this? Everybody feels good about the information, about clear? Anybody confused? Let me know. 9:30 p.m. What is it? Yes, I'm Kate. Yes, 3. Whenever I say Eastern, I'm in Eastern time. So guys, if you have any other question, any resources you feel like you need help with, you could always DM Chris. Please DM him. He'll definitely help you out. Also, if a lot of you guys were asking about your specific situation, I've gotten a lot of messages. So Chris is going to put a link in the Zoom here if you want to talk to us and just find out more about if this is what you like and you feel like you're very comfortable with this. We'd love to talk to you, see if we could help you out with giving you more resources. You never know, maybe you want to work with us. So we set up a call for you guys. It's a free consultation just to see where you're at. Everybody's lifestyle is different. So if you're a busy professional and you don't have time, some things may not work for you. Some things can. So it's very important that this fits you. Chris, do you have that link by any chance? If you could post that for us.
Yep, I just put it in the chat there.
Okay, thank you. Yeah, so you could put that, and we'll probably put it in school. We do have like some opening. I think we've opened up times when so it's for people who are working and you need different times. If there's not a time available, just DM Chris. He'll make sure to help you out. But our goal is to help as many people to get clarity. The one thing about trading, I will tell you, and if you've been around and you try to learn, it's hard to get a human. It's hard to get a human to help. It's really there's videos out there, and I've seen a lot of them. The issues are no matter how good of a trainer I am or the videos I make, people have questions. Everybody's different. Everybody's looking at me right now probably has a slightly different question they would want to ask. Maybe not right now, but they want to ask, or they're interested in how they could make this work. Our goal is to make sure you're trading in a way where it's a little more passive. So, for example, if you have a job and you need something that could supplement that for now, maybe you want to leave your job, but in the beginning, don't do that. Obviously, don't chase stocks for that. You want to learn how to do it consistently. So if all you need is the right blueprint or the right game plan, and that's how we usually help people out. So if you're interested in that, great. If not, definitely check out the material. It's in our classroom section, there's a ton of videos, ton of different material. For example, the paycheck collector. If you're new, don't do the paycheck collector yet. Again, I would ask DM Chris, ask him for the exact pieces based on he'll ask you some questions and tell you and guide you in the right direction. So our goal is to see a bunch of you guys happy here and get some clarity. I'm hoping today that if you got some clarity, I would love a thumbs up if you felt like the lesson helped. If not, just shake your head and I won't look. It's fine. Tim, don't shake your head. I'll be defensive if you do that. I don't like any. Thank you. Oh, Dimitri, man, that's one of our clients. By the way, Dimitri, don't think I don't see you. You're like the top contributor in our academy right now. I definitely see that. I appreciate everything you post. I do read them. All right. Cool. Well, I appreciate you guys. So next week I'm gonna do another live. We're gonna talk about some new indicators, and we're gonna build off of this. Okay. So please stay tuned. All the clients, all the non-clients, all the people who have just joined, new, not new, everybody. Really appreciate you all joining. From Jeff Wagner to Jim Mundis, of course, John Bradhoff, all you guys. Really appreciate it. I will see you next week, 1 p.m. Eastern, New York. I did say Pacific was 2 hours before, so I made a mistake, but thanks everybody for joining. We will see you next week on Wednesday.
Thanks, Vlad.
Yeah, thank you.